This month has been terrible. It has started terrible, and it's barely a weekend, and the markets are absolutely puking. Nothing's looking good. Bitcoin's tanking. Everything is just looking terrible for the outlook here, and it just seems to be speeding up. And we know the talks of a recession have been there. Everyone has had that on their mind, and every single article seems to be talking about how the recession signs are flashing, but this time's different, or these should be ignored, or nothing's going to happen. The data is wrong, or the data is super strong. So it seems that people are looking at stuff and saying, something's wrong. Something seems broken, but all of the headlines and articles are saying, don't even think about it. It's fine. Everything is great. And shockingly, that's what happened before in all the other recessions and downturns in the market. 2008, the dot-com bubble, they were all, right up to the time when stuff started puking, saying things are great, the data is strong, everything is great, and then they end up not being great and being very wrong. But for right now, the stock market lost over $1.05 trillion, wiped out from the stock market in one day. But it didn't stop there. Fast forward just a few days later, and the number's up to now $2 trillion in value gone just in September in 4 trading days. So September has been extremely bloody. It has been extremely terrible, and it's only been 4 days. So what does the rest of the month hold? Is it just starting here? Are we going to see something turn around? Is it just the start of something and people are getting worried and it's just compounding on itself and it'll turn around? Or are we in for a long month that could probably just continue dumping, continue going lower, and probably go lower than what most people would even expect? And honestly, if we look at some of the other data and stuff going on, it just doesn't look good. I mean, there's some charts here. Obviously, someone looked at the unrealized gains on investment securities. So this is like banks holding bonds and stuff. You can see this smaller section here was the great financial crisis, 2008, the housing bubble, terrible times, absolutely devastating. It is nothing in comparison to what has happened in the past few years. It dwarfs it. And yet we're being told everything's fine. There's nothing to worry about. Everything is actually spectacular. But things were so spectacular during this insane massive drawdown that the Fed actually had to make a program, BTFP I think it was called, where banks could go and take a loan from them and get face value for their bonds instead of having to sell them on the open market because they plunged so much in value. So banks and stuff, there would have been a crisis, there would have been banks failing and a huge problem if the Fed didn't step in with this program to bail everybody out. I think the program has since stopped or is stopping soon. So the problem's still there. It's not like the problem went away, but the temporary solution, the band-aid they put on it, is going away. So what are we in for? And also, another big thing is savings rate and credit card debt. It's just massive. Never been more of a gap than it is right now. Credit card debt, record high. Savings rate, we can move this over. Savings rate, record low. Those are not two things that you want to have at record levels at the same time, right? So maybe if credit card debt was down here more in like the median and the saving rate's low, you say, okay, not great, but at least credit card debt's not going parabolic. But you have credit card debt, parabolic, record highs, savings rate, parabolic in the other direction, record lows. That is not a winning combination. So I don't know how, we look at stuff like this, we look at charts like these, where people are looking at them and saying, everything's good. The economy's booming. Everyone's spending money. And anyone who was paying attention to this before, because I think the Fed's starting to turn now, they're starting to say, well, jobs are slowing down, the labor market's slowing down, this and that, we might have to do stuff, and the rate cuts are on the table. But anyone paying attention to this saw credit card debt's exploding. So even if the Fed and everyone's saying people are spending, it's so great, the data was here. People were spending on debt, and that's not a good thing. That's not what you want to see, right? Because at some point you got to pay that debt. But if they're spending massive amounts on debt and saving nothing, there's a problem there. There's a mismatch. That debt could become problematic. And right now, it's a lot of debt. And another sign, if we want to look into it, could be something like Dollar General, because they just recently came out with their earnings. And as you can see, not a fantastic one. Basically, a straight line down from $122 a share back down to 84, what is it, $82 right now. So not great for Dollar General. The earnings were kind of a warning, right? And you think of Dollar General, that's the lower end consumer. I think that's what they actually say. So usually people who are trying to get by, shopping at Dollar General. And that is a lot of people. So when Dollar General is struggling, the whole thing's struggling, because if these dollar stores can't get people to spend money, where are people spending money, right? If they can't go out to these, then it's just not happening. And this is their earnings that came out. They had Dollar General, their shares crater 25% as retailer cuts outlook, blaming financially constrained customers. Not what you want to hear from a dollar store, right? You don't want to hear that even dollar store customers can't afford to spend money. The problems they had were that they missed the Wall Street's expectations on top and bottom lines. Company said part of the issues was its core lower income consumer is under financial pressure, and some of its problems are self-inflicted, and the discounter has work to do to improve its stores and also needs better manage its inventory. So they came out, they said the customer not strong, and then also that they're being mismanaged, I guess. So maybe some bigger problems internally there, but ultimately people aren't spending money, right? So that is a massive sign that, again, people are going to overlook and kind of point away and say, but the jobs numbers look great. But the jobs numbers have now been revised to say, well, actually, oops, we overcounted over 800,000 jobs. So our bad, those almost million jobs that we said were created, people working, didn't actually happen. Those weren't real. And that is a lot. I think it's the most since like 2008 or 2009. Not really dates you want to be comparing to. So ultimately, we've been kind of in this weird zone where there's this just data that people are pointing to and anecdotes that people are talking about. And there's actually a clip, if I can find it, I'll put it up, but Jeff Bezos was on a podcast and talked about when you have data and anecdotes contradicting each other, where the data is good but the anecdotes are bad, you should trust the anecdotes because the data you're using might be skewed or it might be looking at the wrong section. So he talked about Amazon. If he had customers having problems and saying, they don't like this or that, but the metrics were saying sales are up, people are loving it, it's doing great, maybe the sales are up and that could be true, but there's a problem underneath where people are having problems with that you're just not measuring. So you should trust the people and the anecdotes because that's the experience, right? And you might just be missing whatever they're experiencing. I think the same thing would go here. You should probably trust people who are saying this is a recession. It doesn't feel good. No one is certain about their financial future. People are talking about, or people in the economy are saying the economy is not good. Well, the Federal Reserve says the economy is amazing. So when you have data saying one thing, but people who are actually involved in this thing saying another, maybe your data is measuring the wrong thing. That's going to do it for this video. As always, I'm going to smash the button and subscribe, and I'll see you guys in my next video.